right? So now the indicator is going to show like a box like this. There's an upgraded high, and now there's a break here, right, to the downside. The instant expectation when this occurs, okay, is that we are in a reaccumulation model, which means that this model is still extremely bullish, actually. Okay, it's very bullish still. The expectancy here is that price just wants to keep going long. Okay, to continue its given move. This is a reaccumulation model. Now it can break down from what I've seen, what I usually use, 1 to 3 times max. So it can go 1, it could even go lower again, 2, it could even go 1 more, 3, and then come after to take the high. These are all indicative of a perfectly fine reaccumulation model. Okay, and then it continues the bullish push. Okay, it can do 1 or 2 or 3 breaks down. If it goes beyond that, usually you want to step away. Yep, and you can kind of see how there's Elliott involved in this, right? It's exactly that. So the expectancy from a modular perspective is that price wants to go long. Now, let me show you an example of a reaccumulation model in reference to exactly what we just looked at. So number 1 is we've defined the 2.0s and where we want to trade from, right? We know that overall we're probably bullish. Now, let me ask you, why might we be bullish? Look what's happening here from a model perspective. We have a break up, another break up, and 1 breakdown. What is that indicative of? Is that indicative of just a bearish market, or is that what we now have just taught you as a reaccumulation model? Yep, a reaccumulation. So our expectancy is that price wants to come after this high, just from a modular perspective of this time frame, right? And if that's true, well then we want to ask ourselves, where could we trade from? And all of a sudden, price has come into a double MB rule area. So the way that you define, hey, where can I suspect the reaccumulation to happen from? The answers are through the 3 ways that we view structure: other time frame MBs, double MBs, or 2.0s. So there's a beautiful, beautiful symphony behind how these concepts work together. A beautiful symphony. Okay? So price is now in what was supposed to be a reaccumulation. Then, what did we talk about? From the expectancy of a reaccumulation, what did we build from it? We built a 2.0 as well as what we would call intermediary, both, right? We built 2.0s and intermediary of this time frame. So as we scale down into this area here, look what we see here on the 4-hour. Price starts going bullish, breaks. Look at what it's doing. It's making the stepping stones higher. And what do you see? What model is this? That's a reaccumulation model. And is it happening from an area we expected to see those longs? So can we assume that the reaccumulation is happening and is likely complete and should now run for the new all-time highs? And that's what it does. Okay? So that's one way to determine context, is deciding what model you're in on any given time frame. Now, you will then look at other time frames to complement whether that model is true or isn't. And in this case, the time frame of the 4-hour is complementing the bullishness that we're seeing on the higher time frame. So the model of this lower time frame is complementing the model of the higher time frame, and at the same time, the SNDs or double MBs and MBs are all complementing all of that together as well. There's a symphony there. Does everyone understand that? There's a lot here. I mean, there's definitely a lot here. And for someone new, it's going to be a lot, a fuck ton. But I'm doing this so you know what you're working towards and why. So you know exactly why I haven't made a just specific, nice little easy video that you can watch to learn this. Because you can't do it. It's impossible. Okay. The other model is a accumulation or distribution. Now, how does a redistribution model look like, guys? Boop. Consistently lower protected highs, protected lows, protected highs, consistently lower protected highs, breaks up, then we can expect down, expect down, expect down. Those are redistribution models that we expect. Now, for the other side, the accumulation or distribution model. From a singular or real MB perspective, okay, is oftentimes met with increasing, lows, protected highs. Then it starts breaking down. Then it might break up, re-breaks down, re-breaks up. So very simply, if you're starting to see more back and forth from a left to right perspective, and left to right means that we always judge our analysis from, we look very far left as we can, and we ask ourselves what the model or what the market has been doing to determine whether it's bullish or bearish. Basically, when you see a lot of back and forth occurring, and then let's say it's going back and forth still, and then there's a bullish break. So the idea of how this would look like, so I draw it like this, but it's very hard to understand. So the way this looks like in a real market environment, right, is let's imagine price really quickly here, right? So price is going, it breaks highs, makes a new, right, plays around, breaks highs, makes that low, right, plays around, blah, 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 breaks highs, plays around here, but before it breaks new highs, it breaks the low, right, breaks this low, makes a new low, re-breaks lows, so now it's bearish, or it's a reaccumulation, we don't know. Then it breaks long again, makes a new low, right, breaks long, makes a new low. Now we expect reaccumulation, but then it re-breaks short again, now we don't know what it wants to do. Then it breaks long again, 1, 2, breaks double MB long, we can expect longs, right, which is why you see this is likely going long. Then it re-breaks short again, and then it breaks long again. Now, because the most recent break in this overall schematic is bullish, we assume that's an accumulation, not reaccumulation. Again, stop fucking these two up, bro. It's an accumulation. And the same thing goes for this flip side. This would be a distribution model. And it's very easy, actually, on any one given time frame to tell which one of these you're in. But also, it's a little hard because there's no knowing exactly from how far left to right you want to go. So for instance, on EU right now, let me invert this again. If you take a look at the 15-minute, right, given the fact that we are expecting bullishness already, and then the market is going bearish, 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 bullish, bullish, bearish, bearish, bullish, bearish, if we made a bullish break, that would be an accumulation model, right? So my expectancy this week, for instance, would be to see an accumulation model play out, aka wait for price to either break down again, then make a bullish break and then follow it, or start making bullish breaks to end up as an accumulation in this area, and then start going long and then make a reaccumulation to keep going long. This is how you marry those concepts together and understand when you're undergoing which. And then you apply that to multiple time frames because, why am I so long on this overall? Well, the 4-hour is doing what? Bullish, bullish, breaks bearish. Bullish, breaks bearish. Bullish, bullish is that, it's in reaccumulation right now, right? It's overall in reaccumulation. If I go to the 1-hour, bullish, bullish, bearish, bearish, bullish, 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 bearish, bearish. What is this model right here on its own? Not an accumulation. It's a reaccumulation. Again, this model, aka, again, draw it out. That's a reaccumulation. You need to listen. It's very, very important. Because these are minor things that are going to be huge and have huge effects on your own system. If you don't understand what two models you might be in, then you're going to fuck yourself up. Now, on the other hand, if you're looking at this, then I agree. This is what could be considered an accumulation model. But it's only an accumulation model after it breaks bullish. Because at the moment, it hasn't broken bullish. So with the expectancy that this is an accumulation model, that this is a reaccumulation model, that 4-hour is in a bullish trend, that the daily has completed a reaccumulation model, that the 3-day is in a bullish model, does it make sense to assume that if we break long, this is likely an accumulation model that we can follow long? And that's where context is built from. This is your best explanation of context you're ever going to get from any mentorship anywhere. Because I'm giving you the actual tools that I personally use to view the markets and the context that it's in, not just from a standpoint of, oh, I just feel like it might be this, but literally going, what model is this? And does this model get supported by other timeframes? And is that model supported by the SSCs or the 2.0s or the MBs or the double MBs of other timeframes? Because everyone understand that this is the best value for context you're ever going to get, but still, what should be at the root of what you do next once you have this information? 2 words, guys. 2 words. What is it? We spoke about it at the very beginning. Maximize experience. That's the only way you get used to seeing this kind of contextual thing deliver. What you should be doing, as per Webinar 49 and others, is you should be at any given point asking yourself, what model is this? Okay, it's likely accumulation model or reaccumulation model. Now, what are my other timeframes doing at the time that I expect this to be a reaccumulation model? Where is price trading into on the reaccumulation model? Is it trading into a higher time frame MB, a higher time frame double MB, another time frame's SND 2.0? What SNDs is it moving from? If you ask yourself those questions and you do that, like I spoke about last week for like the violin students for 1,000, 5,000, 10,000 hours, you win. You've won. Your reward, you've focused on the reward being experienced, nothing else. None other of this other bullshit. Right? And this is also why, as we love to talk about, the person that joins up and starts live trading and forward testing because they're ready is going to be years behind you if you just work through the course and then begin to accumulate experience. This is why when people go, oh, trading takes so long, it's never going to make it. It's very hard. It's like you can be ahead of probably people that might have been here for a year. Maybe, in some cases, if you focus on the right things. And definitely people that have been learning for 5 years, you can be ahead of them in a month, in 2 months, in 3 months. Okay? Now, a little bit further, you also have what we call MB clusters, which are just very powerful MBs. That's it. All they are, and they can happen any number of MBs in. So it can happen, let's say you had a bearish market, then it broke bullish, made 1, 2, 3, 4, 5, and then it came down and mitigated the last unmitigated candle of the time frame in the previous MB, and then went. This is what you call a cluster, a powerful MB that's now created not only a 2.0, right? This is a 2.0. This is now created a 2.0 off it, but not only a 2.0, but also an MB off of it too. So the 2.0 acts as a 2.0 and an MB, which makes it a cluster, which makes it very powerful, which means money's behind this. So if it returned here, the odds of getting a move is very high. And for all of you that don't know, that you will see, especially if you're new as you're watching the webinars, you guys want to know how we predicted all this EU price action and been able to make a shit ton of money on this move up? Let me show you what the 3-day was doing. Price made a break. It came after the last unmitigated candle. No other candle was left unmitigated. Made a new high, making this point here a 2.0 as well as a cluster, aka making it very powerful because a cluster is literally a 2.0 plus an MB. That's what a cluster is, which is why we call it an MB cluster. So we don't even have to write it that way. We can just write that it's a cluster. Price comes into it as sent out before it ever got there and has delivered us to new highs. And we traded all of this right here. That's a cluster. Okay. Those are pretty much all the tools I've ever taught and utilized in my own trading and the breakdowns of my trading. The only exception being some Elliott wave stuff for other currencies and stuff, okay? But everything we just went over are the exact tools I use every single day, the exact tools my funded members use every day, the exact tools of the people that I've seen get funded and create amazing profits for themselves use every single day, and nothing more. But the hard part is allowing yourself to, one, go through the course, and two, to maximize the experience behind every single one of these tools, because they are all used in a symphony together. Okay. The hardest part, yeah, just like this guy said right here, the hardest part is bringing it all together to create a system, which, by the way, for any of you that have seen the course, what do I teach you guys to do here? Who might know a little bit about something? What do I teach you guys to do specifically in this course? And the mentorship and the process in regards to bringing it all together to create a system. That's quite literally what I teach you to do. Over the 200 hours of the course here, and a little bit over, whatever it might be, I don't know the number, everything you are taught is giving you the exact tools and the exact step-by-step process you need to follow with no miss out on anything of how to develop a system, how to merge these things together, how I merge the things together, how I use them every single day, every single month, and continue to use them consistently, how other members have proven to use them, how other members get funded using them, and how you're going to hopefully get funded with Ment Funding using them. Right? So, now that we are at 3 hours, and we've gone longer than the Wolf of Wall Street, we're going to do a very, very quick outlook. I'm not going to take on any suggestions for outlook. I'm going to go over EU and UJ from a top-down perspective, using the tools I just taught you without just reiterating what I've said before. And then we're going to start the week right. And when somebody needs help, you guys are going to help them in the trade talks and everything, because we have one of the most respectful and helpful communities in the entire industry from what I've seen. So I ask that you continue helping them. But you're also going to be able to send them to this video, which is, one, going to work on their psychology, two, break apart some of the dumb shit that they might have been doing prior, three, let go of all ego, four, rewrite the way that they focus on rules and their reward systems and what they focus on, five, have access to the tools that they're about to learn and are going to learn more in depth. 6, see firsthand how the outlooks that we complete every single week continue to play out are much more powerful than anything they've learned before. Keep them on the right side of price. Keep them out of bad price. And yeah. Let's fucking do it. So, EU. Let's do it through FXCM, just because it doesn't matter what you do it through. You can always compare brokers as well. We're going to remove everything on there. All we're going to have open is my MENTFX structure indicator. Now, for people that were asking, it's not necessary. Watch, okay? If I go to a time frame now, like a 1 hour, I can draw it in because I know what the structure looks like, right? So for instance, if I just went left a little bit here, and let's assume this was a break, right? I know there's going to be a low here. There's going to be a high here. That high is going to get broken here. It's going to make a high here. There's going to be a low here. That high is going to get broken. It's going to get updated to here. The low is going to be here. It's going to get updated to this. The low is going to be here. It's going to get updated to this. It's going to break. It's going to update to this. It's going to re-update to this. It's going to update to this. So you're going to see breaks here, makes this low, breaks that. This is not going to exist anymore. But this would have been the low for a little bit of time. You're going to see something along these lines. This was going to upgrade to that. Oops. Okay. This is what you're likely going to see. And then if you want to really get into it like that, you're going to see something along these lines. Again, the indicator isn't your end all be all. You need to learn to see the price this way, and I teach you how to view price from this perspective, okay? Here you go. The exact same thing. Hold on. Okay, guys, exact same lows and highs, because it's not the indicator that's doing the thinking for me. It's the concepts that I've always taught that I've made into an indicator to help some of you. So for the guy that asked, oh, but what about if I do not have the indicator? Well, I used to do this way before ever having an indicator, okay? Now, let's go through the thought process that I normally go through anytime I view any market to decide whether or not it's in a context that's even worth trading, or what I would be waiting for if there was a context to trade. Okay, so usually it doesn't really matter what kind of time frame you start on, but usually I'll start a little bit higher to define where I am. So you can always start at a weekly, 3-day, daily, monthly. It doesn't really matter, because you're going to use the time frames to prove things to yourself. But very quickly, you know, if I asked you what model does this currently model at the moment, what would you say from a model perspective? So Xylix says distribution, Huzaifa says accumulation, redistribution. So I would say it's redistribution. I don't know the others, but yes, it's a redistribution, right? Lower, 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 breaks up once. That is a very bearish sign overall. That does not mean we're bearish. All that means is that on this given time frame at this given moment, what is being shown to us is a redistribution model. Just because the model is being shown, though, does not mean that that's what the market is actually in, okay? Because at the same time, if we zoomed out like this and we considered this entire picture from a standpoint of here to here, what is this model considered at the moment? At this exact moment. Yep, it's an accumulation, right? So again, there can be different models present on the exact same time frame, and it's dependent upon where we are and then what either a higher time frame or lower time frame is showing to decide whether or not we want to keep following a model in a given direction or not. This is how we put the probabilities on our side. So now, if we know that that to be the true, we could step up to define or step down to define. Both would actually lead to the same answer because I know they would, but I'm going to show you both answers right now to prove that to you. So on a 12-month, the most recent range, I know it's not drawn here, but the most recent range, which is why you should learn how the indicator works, is from this low to this high. That's the singular MB, singular SND, SSC, MB. And it has the SSC coming from here. Now, if I jump back down to that exact same weekly, with that context on top of it, does it make more sense to assume redistribution or accumulation? Right? Exactly. Okay, so Xylix says redistribute. Xylix got it wrong twice in a row. It's time to study up a little bit. But the higher time frame is showing bullishness, and then the market is breaking bullish from what could be an accumulation from that bullish spot. So why would that be a bearish sign to us? Would be my question to you. Right? So that's an example of how you would prove to yourself what the likelihood of this move is at the moment, and in our case, it's accumulation, based on the higher time frame, right? Does everyone understand how using a higher time frame, we just proved the likelihood of this model that we can now follow through on maybe a lower time frame? Does everyone understand that? Yep. So now let's imagine for some reason we didn't look at that 12-month. Now we also are in the question of, are we in redis or are we in UCK? Okay, now, before I even go to a lower time frame, if my daily, for instance, was doing something like this, would I assume this to be a redistribution or an accumulation of the higher time frame of this weekly right now? So a lot of people are saying accumulation. I would actually assume redistribution. Why? Because you have bullish, bullish, bearish, bearish, bullish, 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 bearish, bullish, bullish, bearish. As we just spoke about, that is indicative of, with the most recent break, what? Distribution model. Which means, what would the higher time frame make more sense to be? A redistribution or an accumulation? Yeah, a redistribution. Now, if I went to a lower time frame, and instead of that, I saw something like bullish, 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 breakdown bearish, bullish, what would I assume this model is in? Accumulation or redistribution? Yep, accumulation. Why? Why would it be accumulation? What is this model showing us then? Yep. So now we're going to test that exact principle. If I jump to a daily, what do I see? I see bullish, 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 bearish, bearish, bullish, bullish, bullish. So do I expect this market overall, from a contextual standpoint, of the higher time frame being in either UCK or redis, but the lower time frame being in extremely hardcore re-UCK? Which one do I expect it to be in? At the moment, at least. Yep. This is context put into data for you, to put it simply. Okay? To show you guys what it means to truly understand context, but also the fact that it's not fully like this voodoo concept. You can do a lot with it, yes. People can have different ideas of context, yes. But your understanding of it is going to be unique to you, and you're going to be able to have an edge because of that, okay? So yeah, reaccumulation is likely. Now, if I'm not sure about that, what else can I do? Like, I know this is now reaccumulation likely, but what's another way that I can test this reaccumulation? One is a lower time frame. What's another one? Yeah, a higher time frame. That might not be a weekly. Hey, time frames don't matter. And this is actually why we were bullish here, guys. As we go to a 3-day, back again, what kind of model do we see overall? The model doesn't even matter here because it just went from bearish to bullish, right? So that's fine. So there's no even breakdowns yet. So this is just whatever. The model's fine. So if we start bringing in our normal SSCs and the rules behind them, what are the singular MBs telling us right now? Just singular, not multiple, just singular. What's the singular MB that we're in right now at this point when we were here? Right here. It was bullish. Yep. Now from a multiple MBs, are they up or down? Yep, sure, they're up. Now from a cluster perspective, are we clustering? Okay, so given all of that, even though the weekly is in likely redistribution or accumulation, why do we assume it's accumulation now? Because we've just proven to ourselves via orders and looking at the orders, via the rules of our approach, that we are not only in a reaccumulation model on a lower, that we are also in a cluster model on a 3-day, that we are also in a S&D 2.0 cluster, right? Same thing. Also in a multiple MB up model on a 3-day, and the 12-month is coming from the SSC and moving long and breaking long. So how the fuck are people bearish on this shit? And again, guys, community outlook. Guys, most traders, this includes your little smart money places that you were before and your little Instagrams that you were watching, okay, are relatively short. Now, again, I do not use this indicator ever to actually choose my direction. I've been short on markets that have been overall short and they've worked because I understand context. So don't let this just make all the choices for you. But you're seeing firsthand how we put together context and actually follow markets properly. So overall, without even marking anything yet, we have established what about this market? Where's it going, guys? Yeah, it's very likely bullish. It's contextually bullish. And now if we see reasons to go bullish for our specific confirms, for our specific management styles, blah, 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 then we can trade those. Now at the moment, what is it doing in a singular SSC perspective? Absorbing? No, it's not absorbing. What has the most recent SSC from a singular perspective done? Just SSC. What side is it to within this reaccumulation model? Yep, it's bullish, right? And the most bullish break came from here. And we can find the MB, which is already delivering, and or the last SND, which is what? Delivering. So what do you think is going to happen this week? Very likely. This high right here is getting displaced. Over and over again. Every week we did the same thing, and it keeps happening nonstop, and people keep on finding themselves on the wrong side. How do they do it? How do they do it? Now, again, we can be wrong, guys. We have and can be wrong, but we are almost always on the right side. And at the same time, we have measures in place, aka SSC management testing, where we can still stay out even if the market, for some reasons, begins to go short. Just like all of the last week, I was out of the market the whole week. Now, look what else is interesting. What model, okay, so we already know this is in a reaccumulation model because clearly it's bullish, bullish, bullish. What else is interesting about the structure side of this from an MB or double MB perspective? What can anyone see? What can anyone tell me about this market right now? So someone says cluster, someone says 7 MBs. None of those are correct. Ole got it. There's been a double MB made. Follow the indicator. MB1, right? Broke here. Oh, wait, no. Oh, yeah. MB1. MB2. We have a double MB, which means whatever areas are down here could still be valid. So we might want to refine them a little bit further. Like this or like this, which is a fine refinement. Or we can begin to follow longs here as well. Because now we have this SSC working its magic. We have this SSC working its potential magic. But overall, everything is showing and screaming bullishness. So given that this SSC right here off a singular is already delivering, and it's part of a double MB, and it's part of all the other bullishness, does it make sense to follow this week for longs if it's clear on lower time frames? Fuck yeah, it does. Are you kidding me? Right? And we have a target now. We know where price wants to head. And now, given that, again, what model is this likely to be? Higher, 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 lower, lower, lower. What model is that, guys? That's a reaccumulation. Does that model support every other context we've so far looked at and the delivery of this general pair? Yes. Right the fuck on. Could we, for instance, trade this 2.0 now, this week, if it came in here? Yep. We've now refined this area to be smaller, and now, what does this 2.0 act as now? What does it create in itself right here? Its own SSC, because 2.0s are a formula for making their own structures. And now you have, this is a contextual element. Now you can also, if you're a lower time frame trader, you can ask yourself, maybe there's something lower, or does a lower time frame support the overall models? Let's see. The 15-minute is going bearish, bearish, bullish, bullish, bearish, 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 bullish, bearish. Now, that is what? At the moment, what kind of model is that with the bearish break? It's a distribution model, right? It's back and forth with a bearish break. So right now it's a distribution model. But if price came in here and then broke long, as we would expect, does it make sense to now follow that accumulation model or the new singular SSC to go long? That's how contexts are created. Decisions are made regarding staying in or out of a market and how we wait for things to happen. Because we don't care where we get the entry. We can get the entry here. Or what if price broke long here? Is that now an accumulation model? If it broke long there? Yeah. Now we can follow that. Now what if it went bullish, bullish, and then broke down? What can we expect this area to now act as? Reaccumulation. And where do you think this area here is going to tap into? A higher time frame 2.0 or MB or higher time frame double MB? Yup. So do we care if price goes away from us, down, up? Do we care where it goes? Nope. Because there are going to be multiple multi-million-dollar opportunities every single day, regardless of whether price is going up or down. as long as the context is holding, which is why we don't give a fuck what it wants to do or where it wants to go or if it wants to come for our zones. And we all know with almost a shadow of a doubt, as this probably breaks down here, people are going to look to sell here and here and here, or if it starts going up, they're going to look to sell here for no fucking reason. So we are teaching you to stay, and we're teaching you to stay on the right side of price, one, to develop proper context, to be part of the best fucking community in the world, to help each other, respect each other, grow with each other, share things with each other, share equity curves with each other, push people, motivate each other. And that is why the community is at the level it is. Not just because we have amazing knowledge and education here, but because you guys make it what it is. So now, does everyone understand that the time frame, the main rule that I started this entire thing with, the time frame not mattering, why that's a true thing that I not only believe but teach? Okay? Because the time frame is fucking worthless. The only time frame that matters is the one you decide to be your lowest one that you're going to enter on. So for instance, if you're a higher time frame trader, like the guy that asked earlier, hey, what if I have a job, blah, blah, blah. Your highest time frame could be a 4 hour. And in that case, maybe right now, notice this is what we could call a fractalized. You could have a fractal triple M entry off of this week right there to go long, and you're already in this. Or based on the kind of method you're following, you could have just entered off of this CS right here, like this, to go long. Or off of even a 4 hour, you have this created as now a 2.0, and it's now mitigating it. So you might look to refine it or wait a little bit further, or you could look to CS this start of the week like this, and that could be your trade for the week. There are endless numbers of ways to enter now, because this is now the confirmation side, which we have a lot of things regarding. There's CSs, triple Ms, there's fractal triple Ms, anticipatory CS with triple M, there's MBs, double MBs, normal Wyckoff. There's many entries we teach, and those are all examples that happen every single day and can all provide you very, very good rules for your trading system. So if you're like on this 4 hour binge, or like you want to be on a 4 hour trader, this is what you would do. But notice how every single thing that I'm teaching or showing and every single trade that I show is always based in, there's always some form of confirmation. Always some form of it, right? And then you can enter like such. Now, I believe you could even get really good at context and just enter long form positions, like positional trades. Like if, for instance, remember what we spoke about here with this being an accumulation, reaccumulation? As this is going back and forth here, you could very simply be a trader that does this. Like, let's say you're with Ment Funding and you have a $2 million account. You could say, okay, it's clearly accumulating. I'm going to take a long here. I'm just going to protect the protected low here. I'm just going to look to take this high because I believe this is a very bullish market at the moment. That's it. This could be your entire trading system. You could just trade contexts of the indicator or of basic structure. If you understand what the structure is doing, you know what the overall context is, you could just trade it like such. You could just enter wherever when the context is clear, have a big enough stop, and just look to profit off of the move. Because you know that over time, this kind of move is likely going to result in this kind of move. So for someone that's even wants to be even like a weekly trader or something, well then, you know, if you're here, and remember this tapped into the 6 month, right? I mean the 12 month, as it taps in and then breaks this high, you could be like, yeah, it's probably bullish now. Okay. This could be your trade, right? Or you could have even protected the 12-month low, right? What you have to realize is banks, institutions, the actual big money is trading like this, guys. They're trading like this right here, right? Like they have big orders coming in on clear accumulations. They're also accumulating during those times. So when those moves start, that is why they maintain themselves long term. They don't move like people teach you that they move on Instagram, where they go hoopty hoopty doo, hoopty whoopty whoop, scoopity whoopty doop, right? Like change of character. It's time, guys. It's time, right? This is not what markets move like. So I don't teach you to do that. That is why I don't have a 5-minute course teaching you for $1,000. That is why I have a very long course that is teaching you to think for yourself. Okay, so EU, like I said, bullish. I'm bullish. I expect to follow this bullish, and I will look to follow this bullish, and it's moving very nicely bullish at the moment. I don't know why this is here. It's not important. We can now refine this as well, though, because this is a double MB. It's a very big one, so I wouldn't want to use this whole zone. But you can see this beautiful down move right here. So we could refine the down move itself as such as part of the 50%. And then we could look inside of here for unmitigated price. And you can see as we go in here, there's this little like wiki thingy. So we could refine to there, and then we could jump. What the fuck? And then we could jump inside of it and ask ourselves if there's a better refinement there. This is where I would refine, for instance, because it now makes sense to refine. So I'll go inside of here to refine it, maybe to a 1 hour. Let's take a look. Right, and the 1 hour you can see is mitigating everything here. So really refining it to this area makes kind of no sense. But then you go a little bit further and you find this unmitigated portion within it above that 50%. And then you see this beautiful down move here as well. That's also unmitigated. And then this made this came under it and then started moving. So you could really go after this or this. I'm just going to go after this because I'm assuming that if it wants to absorb it, it'll tap here and then I can get a long inside of there as well. So that's what I'll follow on EU for this week, right? So we already have a bullish sign that's delivering. And if it wants to keep delivering, then I'm going to follow it, right? Just like that. There you go. Let's get rid of this. I don't like my black lines. There we go. So I'm looking to follow this or this, right? And very simply, this is a 4 hour S&D of MB1, right? Refined to 1 hour, right? And this is the 4 hour S&D of MB2 that's delivering right now as per the SSC. That's the high we want to see it run for, right? And that's what you're going to see me send out right now because this is what I'm following, right? This is what I'm going to be following this week. And again, it doesn't mean it has to play out. All it means is I'm going to be waiting for my system, my reaccumulation models, my actual entry criteria to follow this specific week. Okay, now let's take a look at UJ. Isn't that under the double MB though? Nope. Yup, it is. I'm actually a retard. Thank you for that. It's a little bit too long for me. You're right. So actually, let's delete that. This would be the zone. It's actually fully mitigated. So actually, this acts as a cluster too. So if anything, I actually don't want to see price come back here. So you're actually fully correct. There you go. Right, sometimes you can make small mistakes, but again, that mistake wouldn't have hindered me because one, I probably would have noticed it, and two, I still have rules that keep me sane and keep me together. But thank you for actually saying that. This one's a little too long. I usually don't go, 3.5 hours just talking, right? Yeah, thank you for the guy that said that. So yeah, so EU overall looking long and moving very long and moving clearly long. So this week is going to be very nice to follow that. Now, right now it's, it's very ugly, which is why I started the market open. You already know I'm not watching this, right? I want this to play out. I want it to do something, come down, start breaking up, and then I can follow it, break down further, come up. I'll start following it then, break up, make a reaccumulation, and then I'll start following it here. I don't care. It can do any of those. But notice how regardless of if price goes sideways, up, or down, I'm not affected or sad, right? Because everything is moving as I anticipate it to move. I don't know exactly what price wants to do, but I know exactly what to expect. And that's a very important thing to understand. And where you want to get into in your trading. So, and UJ, let's delete everything. Let's go through the same steps, right? As we go to a, what was it on? To a daily here, right? What is something that catches your eye? We already spoke about it, but what's one thing that catches your eye on this? Yep, there's a double MB. Okay, so number one is there's a double MB, and that's from here to here as the big move, right? And then you have the thingy here, and you can refine it further. Great. Now that's not all. At the same time, before we even continue there, what model could you specify? Let's say this area as right here. Yep, a reaccumulation, right? Up, breaks down. That's a reaccumulation. Now, at the same time, though, what could you specify this model as? Redistribution. I don't know who's saying accumulation. You're kind of off the mark there, but yes, redistribution, right? Again, same thing we spoke about. Down, 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 up, breaks down. I mean, this is expected to come lower. And guess what? It's actually mitigated, right? And is moving from the unmitigated portions. So we've now entered what you could call on this market a context that is what? More uncertain. Exactly. You have multiple things saying multiple different things. But notice how, despite this, I was able to catch the longs in here because of this double MB and followed those 2.0s up. Now, though, I wouldn't want to follow this 2.0 because of where we're coming from, left to right wise, right? So now we actually exist at the moment. We can prove it further in this model here where it's actually redistributing, right? So one thing that we could do is we could wait, for instance, for a break here and follow intermediates. Or what is this acting as now? 2.0. So what is this in itself? So what can we do if we wanted to follow a lower time frame, for instance? What kind of models could we look for? What kind of things could we follow? Redistribution, yep, or distribution, exactly. Now again, we don't know if this is bullish or bearish. Right now, it's actually pretty uncertain. I would agree, right? You have the intermediate time frames building up nice 2.0s that we're holding. But again, that's intermediate. What's more important is real. The real most recently made a singular MB down within a model that is what? Redistributing. So a lot of things are pointing to shorts now on UJ, even though I've been very long on this for about, how long? About a month. And now very simply, boom, context has become uncertain or changed. And here it's actually changed to be very short. Now I can prove this context to myself. How do